We are live.
Good evening and welcome to Finance Committee. Attendance has been taken.
Yes, it has.
Okay. Members of committee, are there any declarations of pecuniary interest for items appearing on tonight's agenda? Okay, seeing none. Prior to separating items for discussion, please note that 521 consolidated financial statements is separated as there's presentation associated with this item. Members of the committee, are there any other items for consideration or consent that you wish separated for discussion purposes? Mayor Davis.
5.22.
Year-end operating budget surplus.
Sorry, 5.22, correct. 5.3. 5.34.
Okay, any others? Seeing none, I want 5.23. John Noblehome. With that, can I have a mover and a seconder for all items not separated? Councillor Sullivan, seconded by Mayor Davis. All in favor? Carried unanimously. Oh, please, yep.
Thank you. All those items that were subject to the vote are item 5.1.1, 2024 to 2027 budget strategy, item 5.2.4, update on capital projects, item 5.3.2, quarterly status report on contracts awarded, item 5.3.3, treasurer's annual report on lease financing agreements for 2022, and items 5.3.5, which are the minutes. Thank you.
Okay, we have one presentation on tonight's agenda, so I would now ask Jennifer Chowan and Whitney Dean, appearing on behalf of Millard's Chartered Professional Accountants, please come forward and speak to item 5.2.1, consolidated financial statements. You have 10 minutes inclusive of questions.
Good afternoon. I'm Jennifer Chowan, and here's Whitney Dean as well. We're here on behalf of Millard's. Thank you for having us. Whitney is going to start with walking you through our audit findings report, and then I'll also go through the consolidated financial statements with you, and that will be our presentation this afternoon. So I'll pass it over to Whitney.
Good afternoon. So today I'm going to start with going through the audit findings letter. This letter is going to summarize the audit scope and responsibilities, independence, the responsibilities of management, any reportable matters, and current and reporting developments coming in the coming year. So to start with the independent auditors report, I'm not going to spend too long on it. It is in the letter that everyone's been provided. Jennifer will go through it in a bit more detail when she's going through the financial statements, but it is in the package for your review at any time. And looking at independence, as external auditors for the city, we are required to be independent. These standards require that we disclose to the Finance Committee any relationships that in our professional judgment may be responsible or thought to bear on the independence. We provided a letter earlier in the year that confirms there was no independence issues, and we are confirming again that we are not aware of any relationships or non-audit services that would impair in our independence. Responsibilities of management, as outlined in the letter, discuss that management is responsible for the preparation of the financial statements, including the accompanying notes and estimates in accordance with Canadian public sector accounting standards. Management is responsible for selecting significant accounting policies used in the preparation of the statements. Throughout the course of the audit, we obtain representations from management in the form of answers to audit inquiries, and we obtain a formal management representation at the end of the audit. Reportable matters, the financial statements that we'll be going through discuss significant accounting policies used in the financial statement presentation. During the year, there was no significant changes to those standards. materiality was used during the audit to help plan the audit with the objective of having reasonable assurance that the statements are free from material misstatement. There were no unadjusted differences that we wanted to bring up. In terms of internal controls, management is responsible for developing internal controls, and as part of the audit, we review the controls and gain an understanding of them. During the course of the audit, we didn't discover any deficiencies in those internal controls or any other matters that would need to be brought to your attention. We didn't encounter any difficulties when performing the audit, and we would like to report of the excellent cooperation from staff and management of the city, and would like to thank them for their assistance during the course of the audit. And then finally, at the end of the letter, it discusses upcoming accounting changes. So incoming next year, there's a few changes to the standards. Those would include financial statement presentation, foreign currency translation, portfolio investments, asset retirement obligations, and financial instruments. Management is aware of the upcoming standards and are working at evaluating those impacts. So I'll pass it over to Jen now.
Thank you. So I'll provide a brief overview of the consolidated financial statements. So as Whitney referred to in her comments, the financial statements, the audit report is a clean opinion, which states that the financial statements are prepared in all material respects in accordance with Canadian public sector accounting standards. And I think the clerk's department was potentially going to put the financial statements up on the screen, but in any event, we'll go through the financial statements just at a high level. The consolidated financial statements, just to start, include the city and the operations of the Brant and Brantford Local Housing Corporation, the Brantford Downtown Business Improvement Area, the Brantford Municipal Nonprofit Housing Corporation, the Brantford Police Services Board, and the Brantford Public Library. These financial statements also include the results of the John Noble Home, which is consolidated on a proportionate basis. This proportion is based on the population of the city of Brantford, in proportion to the entire population of the city and the county. I'd also like to highlight that Grandbridge Corporation is accounted for on a modified equity basis. This means that Grandbridge's accounting principles aren't adjusted to conform with those of the city, and the interorganizational transactions and balances aren't eliminated in your financial statements. Grandbridge issues separate financial statements prepared in accordance with International Financial Reporting Standards, or IFRS, that are audited by a separate auditor. So on the consolidated statement of financial position, the financial assets of the city include cash, receivables, investments, the notes receivable, land held for resale, and the city's investment in Grandbridge Energy Corporation. The investment in Grandbridge Energy Corporation represents 41% of the overall equity of the corporation. Liabilities include standard amounts such as accounts payable and accrued liabilities, along with long-term liabilities and liabilities that involve the significant use of estimates. These include your post-employment and retirement benefits, which are determined by actuarial valuation, your landfill closure and post-closure liability, which is determined based on the used capacity relative to the total capacity of the landfill, and your contaminated sites liability, which is determined based on the expected remediation costs of the contaminated sites. And further detail is available about all those balances in the notes to the financial statements. The city has approximately net financial assets at the end of 22 of approximately 250 million, which is up from about 190 million at the end of 2021. So non-financial assets also identified on the statement of financial position include your tangible capital assets. So these represent the city's expenditures on assets like land, buildings, machinery and equipment, infrastructure, so including roads, water, sewer, and assets under construction, less the accumulated amortization taken to date. So we'll go on to the next page if we can in the financial statements, or sorry, if we can go one up, please, just for the, and one more up. Right there, thank you. So we're on the consolidated statement of operations. So the revenues include taxation, user fees, service charges, transfers from the federal and provincial government and other revenue sources. Unique items recognized this year include the gain from amalgamation. So this represents the increase in the investment in Grandbridge Corporation carried on the statement of financial position. So in 2021, the investment in Brantford Energy Corporation, including the notes receivable, was approximately 75.9 million. And at the end of 2022, the investment in Grandbridge is approximately 103 million. So recalling that the investment represents the city's share of the overall equity of Grandbridge Corporation, the increase in the investment that occurred during 2022 when Brantford Energy Corporation amalgamated with Energy Plus. So at a high level, Brantford Energy Corporation was taken to fair value, and that increase in fair value includes goodwill and is flowing through in that gain from amalgamation. It's important to note, while this gain represents an increase in the carrying value of your investment in Grandbridge Energy Corporation, it does not represent cash received or receivable by the city. Other revenues this year also saw a significant increase in 2022, largely due to the gains on property sales in the year. Expenses are presented by the functional areas. However, I'll refer you as well to Schedule 2 in the financial statements, where segmented information is available. So you can see the composition of expenses in these functional areas. I'd also like to draw your attention on this page to the budget column. The budget's presented in accordance with PSAB. So as a result, it's been converted from the original bounce budget passed by council to a PSAB compliant budget. And the details around the conversion of the budget from the budget passed by council to the PSAB budget are detailed in note 25, which is why you will see not a balanced budget in the budget column. Overall, the city had an annual surplus from operations in the year of approximately 82.7 million versus 65.7 million in 2021. The accompanying notes to the financial statements are an important component and provide disclosures regarding your significant accounting policies and additional details related to the amounts presented in the financial statements. So with that, I would like to thank the staff and council of the city for their cooperation with the audit. And with that, any questions, I'd be happy to respond to.
Okay, we got half a minute if anybody has a question they want to ask now. Otherwise, this will be on the floor shortly. Mayor Davis?
Got a question about Grandbridge Energy Corporation.
Mhm.
So certainly caught my attention, both the balance sheet plus the note 9. So the value that we have in the, let's call it the Hydro Corp assets, it's now worth $25 million more than what it was 2 years ago.
1 year ago, yeah.
Yeah, before.
Yes.
So as a result of the merger, the value of that asset is increased by about 25 million.
Yes, so if you make reference to Grandbridge Corporation's financial statements, which are prepared by management and audited by a separate auditor, but you will see how they brought Brantford Energy Corporation in at fair value. And there was also a significant portion of goodwill recognized on the accounting for Brantford Energy Corporation merging into Energy Plus. And so within that gain on amalgamation, there is the recognition of goodwill within Grandbridge Energy Corporation. So there is the chance that in the future, goodwill is evaluated usually for impairment fairly regularly. So there is the chance that it could also go down as well. But at December 31st, 2022, that's the value that it came to.
So I conclude from all that that merger, a tremendous investment.
Well, I will leave that conclusion to council.
Well, plus 25 million looks pretty good.
Okay,
Thank you, Mr. Chair.
we're out of time for the presentation, but you're welcome to stick around. There might be questions once this is on the floor.
Okay, thank you.
So with that, can I get someone to move or second separated items on the floor? Councillor Sullivan, Councillor Caputo. Okay, and the first one that's separated, of course, is the one we were just talking about, so 5.2.1. Any further questions, Mr. Mayor? Okay, well, I have a question. I'm not sure if this is for staff or for the Millard staff, but the vested sick leave. Do we still have employees that are being paid out for their sick leave at retirement?
I can answer that, Chair Martin. There are very few employee groups left in the city that still provide for any vested sick leave payout upon retirement for all groups, with the exception of the Brantford Professional Firefighters Association. Those provisions were grandfathered many years ago, and I believe there's less than 5 employees remaining that are eligible for any vested sick leave payout. The provisions still exist in the agreement for fire, and that is an active vested sick leave plan.
Does that still apply to new firefighters? They still get the sick leave payouts?
Yes, I believe
Okay.
they do.
So that's why it's 3 million then, because there's the fire department and a few other. Do we not have a reserve set up to fund that liability?
Yes, we do have a reserve established for that. So those payments as they come are not impacting on the surplus. We're able to fund those, and the balance is almost equivalent to what the current liability amount is that's indicated on the financial statements.
Okay, so it's not really an unfunded liability. We have a reserve fund to cover that.
That's right. It's not unfunded, but it is a
It
liability.
is a
Yeah.
okay. Okay. See, no further questions. We'll call the question. All in favor? Carried unanimously. Thank you very much. Excellent presentation. There were no questions for you. Mayor Davis, 5.2.2, year-end overall operating budget.
Yeah, a couple of questions for staff. First of all, a comment. The 2,773,913 being allocated to the hospital redevelopment reserve. It's good to see that we continue to build a very positive balance in that account, which we'll use to help pay our share of the cost of a new and upgraded hospital that hopefully we'll see sometime within the next decade. But wondering, where does that now sit? What's the balance? Assuming we do this transfer, what will the balance be?
Through you, Chair Martin, to Mayor Davis, the balance, assuming this transfer takes place, would be just a little over 8.5 million.
Great. And where did the other funds come from?
In our report to the Finance Committee in December, there was some recommendations regarding some one-time surplus the city had received throughout 2022. There was basically 3 pockets of one-time funding that we received that was not expected. One was a rebate from WSIB. One was some surplus resulting in an account held by our benefit provider related to premiums, and the remainder was the special dividend that we received from Brantford Energy Corporation on the close of those operations. And from those, the sum of those 3, most of that money contributed to the initial contribution to the hospital redevelopment reserve fund.
So, Mr. Chair, I know more positive developments following the excellent decision to merge our hydro corporation, and hopefully, I'm very positive we'll be seeing, as predicted, increased dividends over the next 10 years. But another question in respect to the surplus, the 2,737,000 going to the tax stabilization reserve. What is the status of that reserve, and how much do you really need in there?
So I'll answer the first part, and then I'm going to defer to Judy Moore, our manager of financial analysis. So this is actually kickstarting this reserve. So there's no balance currently. It was just reestablished through the concurrent adoption of our multi-year budget policy. But Judy can probably speak to how more about the thresholds that were approved through that policy.
Thanks, Joelle. Through the chair to Mayor Davis, Judy Moore, manager of financial analysis. So this came through the multi-year budget policy that was approved by council back in April. The establishment of this was related to the thresholds that were approved by council during that multi-year budget policy, where we had the approval of a quarter of a percentage of the net operating budget as a threshold identified that staff could go ahead and make adjustments to the budget in year 2, 0.5% in year 3, and 0.75% in year 4. So if I take the average of that, it's about 0.5% of the net operating budget over those 3 years. So if I take that on the current operating budget that we have right now, which for 2023 was $182 million, and multiply that by the 0.5%, it gives us $912,000 a year that staff would be able to use out of the tax stabilization reserve. And then if we fund enough of that for the full 3 years, for the 2025, 2026, and 2027, that gets us to the $2,737,000.
I won't pretend to understand all that, but it sounds impressive. The other question I have, Mr. Chair, is earlier this week, I attended, it was the kickoff of a capital campaign for the Woodland Cultural Center. I mean, we've heard a lot in the last 5-6 years about the residential school interpretive center museum saving that building. This is the Woodland Cultural Center, which is to the left of the historical residential school building. And that's where you see, that's where you find the Woodland Cultural Museum exhibitions. It's an important part of the Woodland cultural scene, and of course the Haudenosaunee culture as well. It's a kickoff to on that same property create a new museum, properly built for the purposes of being a museum and exhibition center. It is going to generate hundreds of thousands of more visits from tourists, and will be a real kickstart to the tourism industry in our region, and also will allow for the appropriate display and promotion of Haudenosaunee history and culture. And of course, it's going to take a lot of money. It's a $65 million campaign. There were representatives there from the federal government, the provincial government. There were luminaries from the Haudenosaunee nation and community, including Ron Jamieson, Ava Hill. There were representatives from the elected Six Nations elected and HCCC. So there was quite a wide contingent there that will be supporting this museum effort. And as well, Mayor Bailey was there as well. And so there are asks being made. It's a little early to tell exactly what we as a city might contribute. I think it's important that we do contribute, but we'll obviously need some funds to do that. And it would be great to do that this year, to participate sort of in the kickoff of the campaign and act as a catalyst to its future success. So I'm wondering, Joelle, where would the such funds likely come from, and would likely be in 6 figures? And should we defer a decision on the surplus until we have more information regarding that campaign? Or do you think that there might be funds available perhaps in other priority reserves or reserves relating to the casino proceeds?
Through you, Chair Martin, to Mayor Davis. Without having a good estimate of what that amount might be, I can't really say today what might be an appropriate source. I don't think it's necessary to defer a decision on this report. All of council's reserves are really discretionary, and council, with their direction, could take money from reserves to provide funding for alternate priorities, even if it's not in keeping perhaps with the original intent in which the reserve was established. This report is also recommending a top up to the contingency reserve, as well as the council priorities reserve, which is typically where those two sources are where we would go for sort of these special items that perhaps we didn't budget for. And there's also an opportunity through the existing casino policy and the categories that are provided for casino legacy funding, that it may fit in there as well.
Thank you.
Any other questions on this item? Seeing none, we'll call the question. All in favor? Carried unanimously. Okay, John Noble Home, 5.2.3. I have a question there. The debenture that's being recommended, do we have funds in-house to do that debenture in-house instead of going out to the market?
To you, Chair Martin, we're not in a position to actually issue the debenture yet. Before the act requires, before we undertake any capital works that we potentially intend to debenture, that we need the council authority to do that. What will be required later when these works are undertaken and we actually needed to perhaps go out for debenture, we would be looking at whether our internal investment portfolio would be interested in purchasing that, as opposed to going to Ontario Infrastructure or another lending institution. That action to physically borrow that money also requires bylaw from council. So that would be something we would come back to seek direction on.
Okay, and have you identified a fund that, a source that might be able to fund that internally?
When we look at investing, we look at our funds really as a whole.
Yeah.
And not individual funds. So at
Okay.
that time, when we're looking at what our existing cash flow balance is, how long this debenture needs to be, and what the current rates are, and in addition to looking at our this will be a long-term debenture, our long-term cash flow analysis needed to facilitate our own capital needs as well. We'll take all of that into consideration at that time. And the recommendation that would be coming back to council if we had a funding source would be to purchase that internally. If we didn't feel that was feasible, the recommendation would be to allow for a bylaw that would provide for external borrowing. But that's a decision council can make later.
Okay, and this debenture, would it be funded by new revenues that are generated, John Noble?
A portion of the debenture financing will be funded through increased per diem funding that's being provided from the province, but not all of it.
Oh, okay. I'm assuming a 20-year debenture.
That will be what's provided for in the bylaw, yes.
Okay.
A shorter term could always be approved later.
Okay, thank you. Any other questions on this item? Seeing none, we'll call the question. All in favor? Carried unanimously. 5.3.1, Mayor Davis, first quarter casino update.
So through you, Mr. Chair, to staff, am I correct if I added the quarterly results correctly? And I know it's done not on a calendar year basis for the casino, probably because it relates to provincial accounting, but am I correct that in 2022, it was about $5 million that we received from the casino, like right in line with what we allocate in our budget?
Yes, Mayor Davis, that is correct. Just shy of 5 million.
Okay. And so we of course are making some payments from the casino reserves to assist in the funding of the upgrade of the Civic Center. But even with those payments, we're still going to have a balance in our casino reserve account of $2,300,000 at the end of this year. That's what's projected.
Through you, Chair Martin, to Mayor Davis. Currently in the report, that is what is indicated, is that the forecasted balance is $2.3 million closing. There was another report, I believe, on tonight's agenda, and I'll get Judy to clarify.
Through you, Chair, to Mayor Davis, there is just a small little note underneath of that table that does say that there was the other report. It was the update on capital status projects that was asking for an additional $1.875 million for the HVAC at the Brantford Civic Center. And that will actually bring the balance of the casino reserve, now that that's been approved, down to $451,000 at the end of 2023.
Right, and then by the end of 2024, you expect it'll be back up to.
$1,444,000. Yes, correct.
All right. Good. Those are all the questions I have.
Councillor Caputo.
Thank you. Through you, the chair, to staff. So I see on the commitments that the HVAC for the Civic Center is at 1.6 million, but I do believe that that's going to probably double. Where will that money come from to pay for the HVAC, or do we take more out of this commitment from the casino? Thanks.
Yeah, through you, Chair Martin, to Councillor Caputo. The additional, you're correct, there is additional funding that's required for the Civic Center HVAC improvements, and that request was actually in the capital update report that was also on this agenda, but not separated. The recommended funding source for that additional funding is also from this casino reserve as well.
Thank you.
Being no further questions, we'll call the question. All in favor? Carried unanimously. 5.3.4 Treasurer's Investment Report. Mayor Davis.
And Mr. Chair, this relates to the investments of the funds that we're holding in reserve, of which of course there are millions of dollars. And although the increase in interest rates affects us on the debenture side when we're borrowing for projects, the flip side of that is that we actually have more revenue from our investments. And I want to confirm with staff, do I understand that due in large part to the increase in interest rates, that the investment income was in fact about $4 million higher than what was originally budgeted for in 2022?
Through you, Chair Martin, to Mayor Davis, the surplus on the operating budget for 2022 related to investment income was almost $1 million. So on a $4.3 million budget, we realized almost $5.3 million. And then recognizing that really the interest rate increases that we've seen didn't really kickstart until the middle of the year. We've annualized that what we expect to be the revenue impact in the 2023 budget as well.
And so what happens with those funds when your investment income is substantially higher than what you budgeted to be?
It does just become part of regular operating surplus. So as part of the surplus report was the $970 some odd thousand dollars. If we look back on the surplus report that was received earlier this evening. So it does just become part of general surplus.
Okay. And is it assigned to particular reserves, or is it in some kind of general reserve?
It is just a general operating revenue account. So the city's reserves in themselves do not earn interest. The interest on those just becomes a revenue source for the city and reduces the overall budget. We do also hold a number of obligatory reserve funds and a handful of discretionary reserve funds, including the Hospital Redevelopment Reserve Fund, that do earn interest, and interest is allocated to those.
Thank you.
Any other questions on this item? Seeing none, we'll call the question. All in favor? Carried unanimously. Okay, we have no resolutions. There are no notices of motion. So with that, we are now adjourned.